Well, welcome back. Thank you for being here. Today, we have an instructional video. Oh yeah. What's that instructional video on? Today we're going to cover exponential moving averages. And a little bit of a short explanation. What exponentials really are average prices of a specific time period. So first and foremost, we're going to go ahead and just turn this off for a second. We're going to go and tell you how to find it. The one that I'm using is pretty awesome. Indicators. You're going to go up here. The one I'm using is, I think, CT MAC. Yeah, CT Moving Average Crossover Indicator. Okay. No, that is not it. Huh. Which one is it? CT MAC. Oh, yeah, that is it. That is it. Yeah, that's definitely it. It just looks a little different when you pull it up, but that's definitely the correct one. So we'll go ahead and just cover a couple of inputs and stuff like that, just to give you kind of an idea of the of the inputs that I use for my moving averages here. We're going to go ahead and highlight this one. The red 10 simple here, obviously type SMA, simple moving average. That is highlighted in red, which is which you see on the price action chart with that line being the top. MA3, another simple moving average, again colored white, is the white 200 simple. Let's go ahead and move this, which is identified this line right here. And then I have the yellow 21 moving average, which is an EMA. That would be the yellow one right here. Obviously, they're just color-coded. The green 55, highlighted by green. The cyan 89, again, highlighted by cyan. The purple... what? Purple 200. Have I been saying purple 100 the whole time? Am I fucking tripping? I have the purple 200. This is an exponential moving average. And then the cyan, the blue 377, which is the last one that I have. Again, this is a a fully customizable one. So again, if you're not comfortable with the color coding system that I have, you can color your moving averages any way, any which way that you desire. You can come over to the style and do that specifically. You set them to different things, but I just do lines because that's kind of how I like it. I do have bright colors and stuff like that because I'm a visual trader. I like the bright and pretty the bright and pretty lines here. So what are moving averages? Moving averages again are basically average price over a specific time period. So for example, and I'll go ahead and bring this one up. The red 10 simple is the average price of the asset that you are looking at over a 10 bar period. Now, 10 bars could be on any time frame. 10 bars, again, could be on any time frame. So when you're looking at, price action on a 4 hour, you're still looking at the 10 bars. It's the price, the average price of Bitcoin's price action over the last 10 bars. It doesn't have to be Bitcoin. Moving averages work the same exact way for all assets. The definition still applies for all assets. So we're going to stick with the daily just to simplify everything. Again, the red 10 simple is a 10 bar period. It's the average price of a 10 of the 10 bar period. So 10 days for a 24-hour chart. And it goes on and upwards from there. The yellow 21 is the average price for a 21-day period. The green 55 is the average price of an asset for a 55-day period. Cyan 89 is the average price of an asset for an 89-day period. Purple 200 is the average price action, price average over a 200-day period, so on and so forth. And basically, I use them as reactionary. A reactionary indicator, obviously in correlation with horizontal support and resistance. A lot of the times, key levels end up lining, key levels that you identify on support or resistance, oftentimes adds adds up to the corresponding support or resistance. But the red 10 simple and the yellow 21 really, they're really more violent. The lower periods are more reactionary than the higher periods are. For example, you see the blue 377 here. We're seeing price action currently, a little bit below the blue 377, but beforehand the blue 377 has just been flattening out a little bit more and a little bit more for so long now. It definitely reacts way less than something like the red 10 simple or the yellow 21 or anything like that. Now, as far as strategies are concerned, there are a couple of strategies, very, very, very easy strategies that you could. I'm actually going to go over here to this price action chart. Very easy strategies. Again, you can customize your moving averages here, but we're going to go ahead and get rid of that one. No, that one we want. And the 200 simple can go away. All right, so here's a very easy easy strategy. This is technically long-term analysis. And again, this is more for like long-term stuff. So you're gonna have the yellow 21, green 55, blue cyan 89, and the purple 200 moving average here highlighted on your chart. Again, you can customize that type of stuff, and you can see how easy some of these strategies are. And I'll give you an example of one strategy here. Now, what you're looking for, again, that 200, that purple 200 here is a higher period moving average. So what you're looking for on this specific strategy is to see price action go above the purple 200 moving average here in correlation with all three of your moving averages crossing above the purple 200. Now, upon confirmation of that, that's basically your long-term uptrend signal here. And quite obviously, you can see now with these moving averages, what you want to confirm first and foremost is, obviously all your lower periods, meaning the 21, all your lower periods are trading above the higher period moving averages. What does that mean? The yellow 21 is above the green 55. The green 55 is above the cyan 89. The cyan 89 is above the purple 200. That is what you're looking for as far as, your macro long-term investment type strategy here. And here, again, this is a perfect example of when it was, your signal to sell. You got all your, lower periods, or excuse me, your lower periods trading below your high period here. So you got your 3 converging moving averages confirming a break. We got a little bit of a back test, but the fact that we saw all of our lower periods trading below our higher periods was your tell that this was ready to come down. Now, obviously, very reactionary. It basically went into an immediate uptrend after the coronavirus dump times. So maybe that's not necessarily the example that we need to be talking about here. Let's go to the $20,000 region here, the 2017 high or the 2019 high. $13,000, $14,000. We saw, evidence of a downtrend here. Your moving average is starting to lose strength. Your lower periods here, and then kind of a warning signal was shot when you saw that moving average go below the cyan 89. And then, as soon as we start seeing crosses here, you're looking for back tests of those moving averages to fail. And, we saw this structure hold a little bit, but in the grand scheme of the structure here, they failed. And here's your signal here. This was your signal. That's basically time to sell a little bit long term. It doesn't always work. You have to really look for the ones that work here. Let's go for an example that really worked here. Here's a perfect one. That 2017 time here is a very, very, very great example of how this strategy worked. Now, obviously, coming all the way back here, and all the way back to the origin, basically you saw this strategy playing out. You could have just bought Bitcoin and held it, and then boom, 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 and then here's your $20,000 region. We started seeing evidence of a downtrend, and then look, we got our 3 moving averages crossed right here, and then boom. You get your back tests of moving averages. That's what you're looking for, is back tests of those moving averages to fail as a result. And that's kind of your confirmation that, hey, this is this is a full-on downtrend, looking for continuation. And if you traded that downtrend here, you were looking at some very, very, very juicy stuff. And we can even go simpler than that here with moving average strategies. We can go into the settings. We can turn off the 21. We can turn off the 89 and the purple 200. Okay. Very, very, very easy strategy, right? For this one, you're looking at price action. Price action trades above the green 55 here. Time to long, right? You see some back tests, you see some consolidation within, but at the end of the day, you're looking for confirmation and follow through when trading any kind of strategy. For this example here, we got this closure below the green 55 here. We never really got any kind of back test and dump as a follow through, printing any new lows. That's your tell, potentially that this is a false break. But as soon as we break back above that green 55, boom. Testing it multiple times, and to hold the trend to the upside. One moving average, and there's a lot of different iterations of how you can play with moving averages. I'm not trying to make this video extremely long. Basically, how I use moving averages, I use them as levels. I'm a levels trader. Obviously, I look for different indicators, different indications of moving average crossovers and things like that. Obviously, things like the death cross. If you don't know what a death cross is, it's when the green 55 crosses below the purple 200, and then you see a back test and confirmation with follow through to confirm that as a death cross. Obviously, you would need to see downtrend continuation as a result. But that's moving averages. That's how I look at moving averages. Anytime there's a pullback, I always tell myself which moving average is it going to test, because again, in correlation with my with my horizontal support and resistance strategy here, a lot of the times my moving averages line up with specific key levels that I'm looking at. And for a quick example, we see the purple 200 here lining up with the $40,700 region, right? That's a pivot point from my perspective here. If I see price action close candles back above that purple 200 moving average here, then I'm gonna be biased to the upside towards the $45,000 region. And as long as we're below that region, I have no reason not to think downside potential is going to be the result here. Again, I'm a very simple guy. I don't get into the quantum mechanics of what moving averages are. I just use them to give me an idea of the momentum of price action. If we see positive slopes on all major moving averages, we see all major moving averages, all the lower periods trading above all the higher periods, that's how something has a lot of strength. But when you start seeing these moving averages really fail, that's when you're like, oh hey, it's starting to get a little weak. The bullish momentum is starting to wane a little bit, right? Give me 1 second. I'm gonna take some water. And again, you guys, if you're looking for Oxford definitions or anything like that, I don't provide that. I try to keep my analysis and my trading as simple as humanly possible. If I try to make it too complicated by understanding all of these nifty things and yada yada yada, it gets too complicated and confusing for me. So I try to keep everything very, very, very simple. Typically with moving averages, I look for moving averages to break. I'll give you an example on AMC. There are a lot of levels. Not a lot of levels. A lot of space between this new resistance here and this support level here. It's basically in line with the yellow 21. It doesn't necessarily mean we have to touch the yellow 21. We could fall through the yellow 21, test the support, and hold the yellow 21. I always look for moving averages to hold or break, and typically those come in line with movements to next targets to the downside or to the upside, and so on and so forth. But this is an example of where you see a lot of strength in an asset when all your major moving averages, including your 377, your white 200 simple, all of those gaining a lot of momentum to the upside. That's your tell of strength here. And once those start failing and we start seeing the yellow 21 or the red 10 cross the yellow 21, that's like, oh, warning shot fired. We have a little bit of downside. The yellow 21 21 crossing green 55, oh, it's a bigger of a warning shot, a lot more downside. You know, green 55 crossing cyan 89, so on and so forth. It's a show of strength for me. It's a show of obviously it's a show of average price action over a specific period of time. But at the end of the day, I use them as levels just as much as I use horizontal support and resistance as levels. Especially if there's a lot of space between a moving average and the next horizontal. You know, here's your yellow 21, and this is your your structure. This is your structure for right now. Below that, we technically do have structure. In the past, it is a major pivot point, but breaking that pivot point would send it right to the next moving average here. So, you know, as soon as we break the again, hypothetically, if we break the yellow 21, I'm always going to say, oh, look at that. The green 55 is a potential target for the future. It pops up on my radar, and you know, even if it's you know further away than the next legitimate target, I always say, oh, this could be the next target, because you never know. So that's how I use moving averages. Again, I don't get too complicated or too complex with moving averages, but it is very important to understand, you know, what they mean and the mechanics, you know, the underlying mechanics behind them. And again, the underlying mechanics that I see is average price action over a specific period of time. Again, red 10 simple, 10 bar, average price for 10 bars. Yellow 21, average price for 21 bars. Green 55, average price for 55 bars, and so on and so forth. So if you guys have any questions on different types of strategies, you know, again, very simple stuff here. I'm not trying to get too complicated. I'm just trying to explain how I like to use them. And again, the way I use them is not complicated whatsoever. There are a slew of strategies that are available. I do have access and the knowledge to many different strategies. So if you have any questions, comments, or concerns about more details on exponential moving averages, please let me know. Hit that like button, hit that subscribe button, tick the little bell for more analysis updates, for more analysis news, and for more analysis instructional videos. And until next time, stay safe, stay happy, stay healthy. Peace.